Good morning and welcome, Patriot Radio News Hour. Joe and Jason, I hope it finds you well out there. And I'll say this, it's a hump day, and wow, so many things have happened. We've had the Treasury Secretary out today. We've had the President out today. We've had retaliatory tariffs. China now matching the United States now to 84%. So you got to remember, so China gave you a free 20, but now it's 104.84 if you're keeping track. The EU has announced they're going to start retaliatory tariffs on the 15th of April. But none of that really matters. The big news is what is going wrong in the U.S. Treasury markets. This is the thing that concerns us the most. Everybody's flocking. Have you seen gold today? Roaring here. This is not how it's supposed to be. We've got a 10-year note that broke above 4.5. I mean, we were down at 3.8. Last Thursday, last Friday? What happened? The auction yesterday, it was a 3-year note auction. Those are easy. Right? It gets harder the longer, right? We know we're not real good at the 30-year auctions, the 20-year auctions. You know, sometimes the 10-year gives us trouble, but the 3-year shouldn't be. It was one of the worst tails. So this 3-year auction, it's kind of funny how it comes in. The biggest tail ever. Remember, as I've educated, tails are bad. Just take my word for it. Tails are bad. The worst tail they ever had was right at the COVID lockdown. They got lucky. That was the day that they did. They also had a horrible tail when Silicon Valley Bank, remember that when they went under yesterday with, there were no lockdowns, no banks went under. It was the third worst tail ever, and it was really close to taking up the Silicon Valley tail. And all eyes are now on is the safe haven trade that we've known for 40 or 50 years, right? When things are uncertain, they rush to buy treasuries. Is that over? I don't know. Too early to tell. Everybody's worried that China may stop coming and heaven forbid selling. I don't know that either. I don't know. They're already selling. I think China keeps doing what they've been doing. I mean, they could dump them all. Boy, I don't even want to think what that would look like. But batten down the hatches here. I've been telling you for how long to be your own central bank. I've been telling you for how long. Please get more diversified. Please. Do you not get it yet? Oh, I'm going to wait to see what happens. It's happening. Right? That's the funny way. Oh, I'm going to wait. No, it's already happened. Here's the thing. I'm going to warn you, too, about maybe I should start buying these things because they look cheap. Nobody yet, and let me tell you right now, yes, if you look at some of these stocks right now, I'll take Apple as an example. It looks a lot cheaper than where it was. Here's the thing, though. See, everybody's lost. Nobody, and when I mean nobody, I mean nobody yet, has started to downgrade earnings. Because they're like, well, God, I don't know. Like, if this ends next week, then they're going to wait. It's not ending. Here's the thing right now. I can tell you right now, Apple was supposed to do $7 or $8 a share. They're not going to. It was going to be $5 until what happened yesterday. Right? Yeah, Apple, it could be. Could Apple be down to like $3? not a share, but their earnings, right? From all of a sudden, this new low Apple price, it doesn't look so good if it's only $3 or $4 versus $7. So be careful. Nobody yet has gone back. You know, we've seen like Goldman, and you see them a lot. Hey, we've taken down what we think the S&P and the Dow and we've taken those down. But they haven't gotten to all these individual companies. I'm telling you right now, stocks still aren't cheap. I want them to be, but they still aren't. 800-951-0592. I will tell you, today is it. I was on the phone with Jason this morning. Then my wife and I were in the back counting everything up. I've had this seemingly endless supply of $20 gold pieces where I've been able to offer to you way below regular price. I thought, and Jason will back this up, I thought I still had about 70 of them. Nope. We got less than 30, and then the price is going to, go where it's supposed to be. So if you're looking to add to your portfolio, do it today. Patriot Radio News Hour, Joe and Jason. We're going to be back right after the break. 800-951-0592, Patriot Radio News Hour. Let's take a quick look here. Boy, another one of these just crazy moves. At one point, the Dow futures were down another 1,000 points. Then they rolled out Scott Bassett, the Treasury Secretary, to try to calm nerves. I'm going to tell you something what he said. A lot of it was BS. But the biggest thing that he said was, in my career, so you got to remember, he's had a very established career. He worked at the Soros hedge fund, made a lot of money. Smart guy. I'm telling you, he's better than Janet Yellen, in my opinion. Okay? I don't know what that's worth because I didn't have a very high opinion of her, but take it for what it's worth. But he laid it out and said, it's Main Street's turn. What does that mean? It's Main Street's turn. Well, he goes, for 4 decades, I've watched Wall Street become incredibly wealthy. Wall Street has grown wealthier than ever before. But the next 4 years, we're focused on Main Street. Okay, listen, that's as nice as he can tell you. If you have the ability to diversify out of the stock market, do it. That's what he's saying. Right now, the Dow is flat. It has been all over the board today. The S&P's up about $8. The NASDAQ's up 100. The 10-year note, boy, got above 4.5 early. Right now, 4.41. I mean, it's incredible how fast this moved. I mean, we've gone from under 4% to 4.5% in a couple of days. There's a problem brewing in the markets. Right now on TV, gold's up $100. I'll tell you, hey, I'll be a little kinder. It's only up 95. Spot's up $95. 1,080. Silver's up 54 cents, 30.33. Let me give you the number. 800-951-0592. As I told you earlier, I've got less than 30 20s, 31.75 until they're gone. 32.95 after that. And by the way, probably not going to be that. We'll most likely be above $3,300 tomorrow. Buy them now. Get it done. So what's happened? What happened? I don't know if you remember, a few weeks ago, I warned you about these hedge funds that were buying these treasuries and they were leveraging them. In other words, hey, we're going to take a little bit of money and control a lot of treasuries, and then we're going to bet that the yields are going to go down. Whoops. So yesterday's auction, $58 billion of 3-year notes. It got off to a terrible start. The bid to cover way down. Okay, so that's not good. In other words, there wasn't that many people putting bids in. Right? I mean, so that already was bad. Inside of it, there was worries that China may, will they not show up? What's going to happen? What ended up happening is the indirects, which is simply foreigners, okay? So put China in there. They ended up to 70% of this auction. You're like, what the heck happened? Why so much? Of course, that explains the tale, because these countries are like, well, if I'm going to buy it, you're going to pay me more. Here's what happened instead. The directs. That's right here. That's domestic. Here at home. 6%. The lowest ever recorded for a U.S. 3-year Treasury auction in history. Jason, it simply means that these large buyers of the U.S. Treasuries, these hedge funds, they're out and they're having to go. I honestly think there could be a situation in the next, as early as tomorrow, if things get worse. I don't know that. We don't know. But there may have to be central bank intervention, because this cannot last. This is something that, for some reason, once again, people got caught off guard. People got surprised. I don't know why, because we've been talking about these hedge funds are going to have this problem for several weeks now.
Gold up $102. Gold up $102 right now. I'm looking at all the numbers, because we have a market downturn, no doubt about it. Now, is this short-lived? Is it going to bounce? Are we going to have another dip downwards later? This looks like the real deal. I thought it would come a little later this year. I told you, and I've been talking to the audience every day. Something like this was coming, but I thought it'd be a little bit later this year or next year. If it's happening now, Joe, if we get something close to COVID, I was looking at the COVID numbers, the big COVID crash that nobody wants to talk about, in just over a 3-week period, 29,000, Dow was down to just under 19,000, 33%, 3 weeks. If we have this, let's just say with the tariff thing we got going on, let's just say we have another 3-week dump, which this thing started, we had 42,200 on the Dow on the 3rd. That means on the 24th, in 3 weeks, if we were to record a similar situation, and this is economics, this is what happened during COVID. It's just everyone's freaked out about COVID. The Dow went down 33%. We would have to be at 28 1,290 for that same situation, Joe. If the same similar situation were to happen, now let's say we stretch it out a little bit. Well, if you stretch it out a little bit, more than 3 weeks, this thing goes into the summer, well, then you're probably going to go down more than 33%. And when you look at COVID, Joe, right, by December of 2020, the market was up from where its position was. Well, what was going on? Oh, in December 2020, vaccines were being rolled out. All this big money was trying to find something to invest into, and pharmaceuticals suddenly were rolling in the bucks, right, Joe? Remember that? There was somewhere to put the money. With this market crash coming, with the consolidations coming, and these tariffs that are trying to squeeze every penny out of their citizens, where is the big money going to go to stop the downward spiral of the stocks? How long is it going to take for them to have something to put their money into, right, Joe? Is it going to be the same old song, war? Well, you invest in all the war, the tech companies, the drones, you could see that they'll have this huge plunge until they decide to invade Iran or whatever thing it's going to be. And the markets may come back, but Joe, the destruction is going to be heavy, and gold went berserk. We were selling $20 libs for $1,250 in 2019 to $1,300. Then we were selling for $2,200 by August of 2020 when all this was going on. So you guys had some time to get the gold. It was down about $200. Forget it. If gold goes down because the markets are going down, gold will rebound. Gold is going to hold its position. There's no time to be waiting for I think gold's going to drop like 2011. It was at $2,000 and it dropped way down. That's not happening this time.
No.
Look at these market moves. The market was down 1,000 points last night. It got up 100 points. Then it went back down 1,000 points again. Then it was back up. And now where are we at? Are we down again, Joe?
Right now, no. We're
about $100.
We're up 100. We're up $100.
Volatility.
100 points, I guess, not 100, but 100 points. Gold's up $100. And is it over? I don't know. We know that Millennium, Citadel, others, these hedge funds have had extreme exposure to the Treasury markets. They are caught here. They are way over leveraged. This is something where I don't know how we're going to get out without the Fed having to come to the rescue here. I cannot see them allowing like Citadel to go under. Maybe. I just don't see it. I think we're going to see significantly higher gold prices very quickly here. This run to the U.S. Treasury market, the flight to safety isn't happening. Think about when gold fell, right? Remember, 10-year note was what? About 4.3? Went down to like 3.8? Oh, it's the flight to safety. It's the flight to safety. It's the flight to safety. Look at today. There's no flight to safety. Well, actually, that's a lie. There is a flight to safety. You know what the safety is? It's gold. It'll always be. And I think the Treasury Secretary laid it out. Hey, it's Main Street's turn. What he meant by that is we're going to take down Wall Street. Now, the problem with it being Main Street, sir, Main Street, right? You got your 401ks and all of that stuff, right? If you got big IRAs, why are you not calling? I don't get it. Get diversified here.
Your 401's getting slaughtered right now.
Yeah. I truly don't they're point blank telling you. I'll give you another case. So Donald Trump, okay, saying, hey, we got countries calling, right? 50 of them, 60 of them. Do you know that a bunch of the countries are all complaining, saying, yeah, we called, we haven't heard anything. The only countries, I had a great talk with Japan and South Korea. That's great. Here's the problem with that. Do you know our three biggest trading partners? It's not even close. Mexico, Canada, China. Those are really the only three countries that matter, honestly. And guess what? We're not doing anything with it. Well, China, we just keep making war. I don't know. Is Donald Trump going to go to 200%? I don't know.
Oh, yes.
And by the way, today the EU said, okay, that's it. We're going China's way. We're imposing retaliatory tariffs on the U.S. on the 15th. So,
and I think China and Canada and Mexico are just waiting to see what's going to happen. You have a couple countries like China and Europe pushing back. You'll see Canada and Mexico push back. I think they're just waiting, Joe, because they didn't want to act rashly.
Well, Canada, people don't really listen. Well, and I get it because it's hard to listen. They've already implemented today. They're putting tariffs on U.S. autos. So it's not like they're doing nothing, right? And through all of this, here's the only thing that I don't, Bassett, we're going to Main Street, forget about Wall Street. And, of course, we're going to get tax cuts. That's really the only message we're getting right now. 800-951-0592. 800-951-0592. Yeah, that was back down again. So we'll have to keep watching here. Gold's up $100 right now. 3,086, 3,080 up 101 here, 3,086. We've got 22 $20 gold pieces left. That's it. 31.75. 31.75. That is $125. Well, yeah, $120 off. And again, I don't think tomorrow we're going to be above $3,300. That's just where it's going to end up being. 800-951-0592. By the way, people are starting to spread here about what's going on in the Treasury markets. We knew these hedge funds were way over leveraged. Go back. People forget, that temper tantrum before COVID. People forget. The Fed came, we got to have a facility. We're going to start it with $20 billion. And then the next day, okay, well, how about $50 billion? Oh, wait, $100 billion. People forget. Estimates right now. They're saying that the largest hedge funds, and there's like 6 or 7, these are globally the largest hedge funds, are even way more over-levered this time than the last time, and by hundreds and hundreds of billions of dollars. Estimates now that the Fed may have to have a bailout facility somewhere in the ballpark of just under $2 trillion. That is what they're kind of talking about. That is just, it's crazy to think about it, right? Where they just got the balance sheet to around $7 trillion. Jason, they can wipe it all out in a matter of a single day. And then Ray Dalio, remember, I tell you people who to listen to, right? For 2 decades, I've been telling you to listen to this guy. And he warned that everybody's so overly focused on tariffs, they're not paying attention to the bigger, what he calls once-in-a-lifetime breakdown occurring in major monetary, political, and geopolitical orders. And, of course, what is he talking about? Yeah, forget about the tariffs. There's big pressures, and these imbalances need to be corrected one way or another. It's obvious that the capital imbalances, the deglobalizing of the world, major players can't trust the other major players. And Jason, I think it's just now a matter of time before the emergency hits, right? I know the Federal Reserve doesn't want to cut rates, right? They keep saying we don't want to cut rates. I think before they have to cut rates, Jason, I think there's going to be a bailout. That's what I think. I think the Federal Reserve is going to have to restart quantitative easing. I don't see any other way around it. I don't see it. There's not the flight to safety that was needed. It just didn't happen.
Who gets bailed out? Who's going to get the bailouts will be the biggest question. I mean, the 2008 housing crash, which kind of started in 2007, the market about 14,000. When it got to its lows in March of 2009, it lost about 50%. So it took a little while. There's this mantra in Wall Street, sell in May, walk away. A lot of rich families like to just take the whole summer off, right? The kids aren't in school. It's a rigged system. This thing is rigged. During the COVID crash, that was in March, essentially. By August, the buying season, the markets had come all the way back. It bounced so rapidly. So you didn't even have the year-and-a-half problem like you had in 07, 08, and 09. And it's just rigged. It's completely rigged. Most of the money in there is very wealthy money. They're only going to put their money back in when there's something that's going to make them money, where they can get others to put their money in with them, like pharmaceuticals for vaccines. And what's it going to be this time, Joe? It sure looks like sell and may walk away. What if I'm right? What if there is a 33% drop in a month, like COVID? The market will be 28,000 by the end of this month. That's very possible with what's going on. You have this tariff thing going on. Joe and I was talking to Joe, we were on the air yesterday, Joe. You were getting kind of down, like, oh my gosh, this looks way worse than I was first thinking. It's like, well, when you want to have a market crash nowadays, maybe without a pandemic, we could still have a market shutdown because they're not going to ship anything. What if they don't, Joe, what happens if they stop shipping stuff because America goes up to 500% tariffs and China reciprocates and goes to 500% tariffs? At some point, it's like, okay, well, we're just not going to ship anything. It's unaffordable. And you got fingers pointing back and forth.
Does Apple stop shipping?
Stop shipping.
iPhones?
Yep.
Do they? Because there's 100%. I don't know. Again, I'm just more focused here. This is, and again, I hate it. It's worse than I thought. And it's about the Treasury market. The tariffs are what they are. But as we're watching here today, as a Delta saying that they use the word air travel has stalled, they've pulled guidance. Walmart has pulled guidance today. Jason, that doesn't happen. Delta's one thing. Walmart, they don't pull guidance. Right, and they're not pulling guidance because they're like, oh my gosh, your sales are going to go through the roof. We're going to, no. They're pulling guidance because they're like, man, the hit that we're going to have to take.
Walmart knows. They had just had a meeting with China. Remember that, Joe, just a week or two ago? They sat down and it got into the media. They officially sat down with China, and China probably told them, this is what we're going to do. They probably covered it, and Walmart got ready. I mean, let's face it, you're the biggest companies in the world. You probably can afford to get answers ahead of time. You can get on-time information instead of lagging information that Joe and I have to try to swim through, Joe.
Well, and again, I think the jump in the tariffs here it was one thing when they were 20%. There was another thing when it was 54%. Now it's a whole nother thing at 104%. And when you have these coming, this is why I warned earlier, right? We don't know how expensive Wall Street still is because no one's actually gone now yet and redone the numbers because they still don't know. We don't know exactly what it's going to be. We just know it'll be lower. We just don't know how low. And just like that, the Dow's down 100 plus, the S&P's down. The NASDAQ's still the only one hanging out in positive territory. Gold's up 102. We'll be back after the 800-951-0592. The last of the 20s. You better hurry up. 3175. And that's it. Unless, and again, we've been around almost 30 years, so maybe somebody else will walk in the door. But right now, this is it. And then get ready. You'll be looking at prices $100, $150, $200 higher from here. By the way, I'm going to give you a number. Watch out, 3,100. Gold breaks 3,100. We're probably going to be talking new all-time record highs just that fast. So, again, showing you that things are changing here. We have a problem. Think about how many years I've been talking about the problem in the U.S. Treasury market, right? Where just less people coming, right? We're weaponizing everything. What do you think these are? We're weaponizing. I mean, I get it. Listen, Trump's the great negotiator. Is he? If he's so great, why we couldn't have negotiated these deals without doing it this way? I don't know, right? This kind of sounds like, hey, I'm going to hit you over the head, and you better stay down. If you get up, I'm going to hit you again. That's not negotiations, right? We'll see. I want to be wrong here. I think Ray Dalio had it right. And this is why. So, Jason, I saw, just so people know, we do another 2 hours after this show, like the half-empty cup. And towards the end of that show.
Yesterday.
Is when the news broke about that 3-year note auction that we talked about earlier. And Jason saw the look on my face, and then I came out and said, oh, my God, right? This is way worse than I thought. That's how off guard I was. And
we were talking about it. We talked
about it on the air, and I was so focused on these tariffs and trying to understand. And now all of a sudden, maybe it makes sense. We need cover here. I think the Fed is going to be forced into action that they don't want to do. I know the Republicans are hell-bent on getting these tax cuts. They feel like they have to.
Yep, and they do have to.
Right, to have any semblance here. The problem is this is months down the road. All of these things, this issue doesn't go away. And as honestly, let's look at it. Go back to February, and really before February, when Trump got in. Listen, Trump ran. Hey, I'm going to come with tariffs. He said it. We voted for it. February, they delayed it till March, right? But has any good news happened yet? Any? Seriously, any? And the answer is no. Right? And I don't know why people expect something different. I think Donald Trump, now China, and then, I guess I'll put China kind of aside a little bit because they were the first one to get back up, didn't stay down, and now Europe's not staying down. This is going to be here a while. I guess this is what I'm trying to get through to people. This is going to be here for a while. And unfortunately, listen, I don't know if the Main Street thing is actually going to work. I don't know. But I promise you this, the Wall Street thing, it's not working.
Well,
and it's not going to work. That's the message you need to know.
The Wall Street works really.
It'll work again. It'll work again later. I don't know, but
it's working for the biggest players, Joe. They are escaping this thing years ago, months ago, even weeks ago. It's working just fine for those that know and have the privilege of being in the information of knowing when to sell and when to buy. I mean, look, let's say I'm right. We have this huge
How
market.
big of a genius does Elon Musk look when he sold all of his stock? How big of a genius does Jamie Dimon look when he sold or Bezos or Zuckerberg, Warren Buffett? They all look like geniuses.
And now let's let's just say I'm right that we have a tremendous crash and it does rebound sometime later this year. Let's just say it actually rebounds. And then I'll tell you this, it'll crash again later this year or next year, probably about the same time. But let's just say I'm right for this moment. Your 401k, if someone is actually working your 401k right, should have been getting out before this. They aren't. So this is how the wealthiest make you pay for their gains. You're going to get out later and take tremendous losses. You're going to keep feeding your 401k, and here's the thing. You're going to be buying it when it gets too high again on the other side. You are feeding this system. This is a completely rigged situation. You're going to be selling.
Whose money do you think ran up the Dow 1,000 points yesterday? It wasn't Wall Street's money. They were using your money. They weren't going to do it.
And that's what happens. You're selling your 401k low, and you're buying your 401k high. I talk about the peanut butter jar. It's been a while when these crashes come, like the COVID crash, with the housing crash, the 9/11.com crash. The peanut butter that gets put in the jar, it's all the richest of the rich. They put their peanut butter in there, and then the market starts to work, and now you have the Dow on the third up at 42,000. Well, when it starts crashing and burning, well, the peanut butter's already out of the jar. That stuff stuck to the side. That's your little bit of gain. All that stuff stuck to the side, that's all of us. And here comes the big spatula, and they just come and clean you right out and add it to their pile. This is why you really should not be. You're getting fees, you're getting taxes, you're getting penalties. You can pull it early. Good luck on your paper investments.
800-951-0592, Patriot Radio News Hour. My gosh. The last of the cheap gold. And notice I said cheap. 31.75, and once they're gone, that's it. Everybody better get ready. How big of a bite of the sandwich are you going to take? If you've got a big IRAs, call us. Call us and convert to a precious metals IRA. You don't have to put all of it in there. No one's telling you to do that. But you got to take a good chunk of it and get yourself more diversified than you have ever been in your life. 800-951-0592. And then Jason will just wait to see what happens. You know, the problem is I think we got a 10-year auction today, a 30-year auction tomorrow. These are tougher ones.
Well, isn't Trump going to come out today and have to say something about China?
Well, he came out today and told everybody that be cool. Be cool. Be cool, guys. Be cool.
Well, I think Fonzie's going to be punching the jukebox one more time today and raise the tariffs maybe around noon. We'll see.
Well, the 10-year note will not stop here, so look at this. We're at 4.45. We've been as high as 4.5. You think about that's near the highs that we've seen. This is normally not what we expect to see happen. We're looking at the dollar. It is down against everything with the exception of the renminbi. By the way, the renminbi, I told you, right, down to the lowest since December of 2007. Right? China's not playing around. I don't know why anybody would. And this is, like I said, the biggest problem for us. How do you know if something's a good buy until we get these earnings adjusted? And if you're watching the earnings, they all say the same thing. Oh my gosh, yes, they got to be adjusted lower, but we don't know what to do yet, so we're going to wait. I hate to tell you this. Wall Street's not on sale. I wish it was. It will be again. It will be again. But it's going to be at a much lower level than people think. And again, I think the biggest thing, the biggest question now in my mind is, when is it that the Federal Reserve is going to need to step in and save the U.S. Treasury market? And if history's our lesson, Jason, they're usually late, right? And that's kind of the problem, right?
Well, I mean,
right?
I've seen models, serious models, that the markets can go down 75%. That would be Dow 42,000 down to about Dow 11,000. If that were to happen, even if gold were to sell off $1,000 and go down 33%, you're better in gold now, losing your 33%. The inflation happens and the market goes down 75%. So gold going down, you're better than what's getting ready to happen, Joe. And gold went up $100 today. Gold's up $100, but it probably should be slipping with everything else. And it's just taking a big stab, Joe.
Yeah, is it a changing here of the guard? Too soon to tell. Jason and I, we're coming right back with the half empty